Welcome back. You're watching us here on Halftime Report. Senco Gold is the stock on our radar. Reported a very good set of numbers in the fourth quarter, especially after the previous 3 quarters where there was a sharp margin contraction. And as guided by the management earlier itself that they would see margin recovery in the fourth quarter, that's exactly what has happened. The stock up 1% right now because over the last 3 months or so, it has seen a big rally, though still 50% off its 52-week high. We have Suvankar Sen joining in. Suvankar, let's start with your outlook for FY26 because the first quarter you had given an outlook of 18% revenue growth because of the Poila Boishakh as well as Akshay Tritiya sales that you saw already. Do you stand by 18%? Do you think you can better that? And for the full year, what's your margin and revenue growth outlook?
So if you look at the previous year's full performance, in terms of revenue, we've grown by 19.7%. And if you look at the way the numbers have been looking in the month of April and May, we are growing in the range of 18 to 19%. So while our efforts and endeavor will be to take it closer to 20%, but I will stand by the growth, revenue growth of 18 to 20%. And until now, I think that we are clocking those numbers.
And for margins, what are you talking about? Because you had said 8 to 9% earlier. You recovered that in the fourth quarter. Do you think this run rate now sustains for the next few quarters?
So see, we have to understand that why were the margins looking low in the previous financial year? And time and again, we said that the impact of customs duty in the month of August was the one which was impacting the overall margins. And we were confident that in the Q4, where we could see that, the diamond selling trend had picked up. The duty impact was done and away with, so that wouldn't be there in Q4. So that is how we saw that the recovery happening in Q4. And I think that we can continuously see that interest in diamond jewelry, especially with the gold prices being towards the all-time high. So while the confidence and the trust on gold as a commodity continues to remain in the mind of the consumers, but they are also looking for lower cost, options, which is in 14 and 18 karat jewelry with diamonds studded in it. So the diamond sales are continuously in an upward trend right now. So yes, in terms of margin, if I look at it, the EBITDA levels, adjusted EBITDA of the previous financial year was around 6.5, 6.8%. So that my 6.8 to 7.2 is the EBITDA levels that we will be looking at for the whole financial year.
Okay. So diamond growth was very strong, 39% in Q4, and I believe it's about 11% of your overall revenues. Now with consumers perhaps moving towards or being a little more aggressive on diamonds, what could the revenue contribution of diamonds go up to? What would the growth be? Can it sustain the Q4 run rate, for instance?
On a sustainable basis with the various seasons that we see, we are expecting a growth of close to 20 to 25% because the diamond growth in such a situation and a scenario is usually higher than a gold growth. It is just that the gold prices have been on an all-time high. It has moved up so much. That's why we are seeing a value growth of almost 20% and a diamond growth of, say, 35% in the current ongoing scenario. So I think that, yes, a 25 to 30% is going to be our effort. And if the gold prices continue to remain on such high levels, consumers will be looking at buying more of diamond jewelry. However, the catch point here is that Q1 is one of the festive season. Q2 is one of those seasons when we usually don't see much of buying happening. We all have to look and pray for a good monsoon so that the upcoming festive season of Q3, the wedding seasons, and the Q4, that should be strong. So Q2, we will not see as much as that kind of number. But again, Q3 and Q4, we will see a good pickup in terms of diamond and in terms of overall jewelry industry also.
Yeah, just to confirm, 6.8 to 7.2% is the margin guidance that you've given for this year.
EBITDA margin, yes.
Yes. Okay. On gold prices and diamonds and how consumer behavior is likely to be is what my question was on right now. Because yes, gold prices are making record highs consistently. So consumers are reducing the volume purchase and because the value purchase is increasing. And secondly, they're looking at alternatives. But diamond, while you're buying jewelry for adornment, you're also buying it as an investment value. Diamond hasn't proven to be a good investment over the last many years, and with the lab-grown diamonds coming in, etc. as well, that the attractiveness of diamonds as an investment proposition has come down even further. So do you think that consumers will now buy plain gold things like coins, etc., going forward as against jewelry for adornment, which may not be as high value? I mean, just wanting to understand what consumer behavior at high gold prices is, because we've also seen your gold exchange, old gold exchange, come up to 39%.
Yes, old gold exchange has come up to 39%. And what we are seeing is almost 60% of that is the non-Senco gold that is coming in, which means that, like what we have been seeing in the last 3 years, the shift from unorganized to organized is happening at these high gold price level also. And as far as the investment outlook of a consumer towards gold versus diamonds is, see, we need to understand two things. One is that it is only solitaires which has always been looked up as a investment for diamonds. Small size diamond, which is almost 90% of the business that we do, has been looked at more as an adornment, as beauty, as a symbol of romance for the daily wear or for weddings and all of that. It is only in the bigger size that the diamonds have looked as investment. So what we are seeing is that the consumers who were investing in diamonds have also started understanding that no, they need to invest in gold bars and coins when it comes to investment. But when it comes to adornment, what people are seeing is that at such high gold prices, the lightweight everyday wear jewelry, which is we are seeing the average ticket size that is, for us, let me tell you one more number. The average ticket size, which was 63,000 rupees in the previous financial year, has gone up to around, it's gone up by 15% to 72,000 rupees. So irrespective of the fact that, we are talking of gold prices moving up, there has been an increase that the consumers are having to shell out a higher value in terms of what they want to invest in jewelry. But that is not equal to the rise in gold price, which means that there is a 4-5% decrease in volumes, which means that now consumer is saying that fine, and in this range of 60 to 70,000 rupees, what is it that I can wear on a daily basis? If gold, it is looking too light, but if it's diamond, it's looking modern, trendy, and stylish. So that is where we are seeing a convert. So our stud ratio has been 10.9. And what we have been saying is that we want to take it closer towards 15%. And I think that is very much a possibility in such high gold price scenario. So I hope that what I try to explain is solitaires. Yeah. And one more information is solitaire prices are now gradually in an upward trend. This coming 2-3 months is
right.
Critical.
So we take that point entirely, Suvankar. Finally, before we let you go, you've given us a great primer on how to look at gold and diamond as investment or adornment and all of that and stuff. What about the primer on investment in your own stock? Because promoters have increased their stake over the last couple of months, but this after having diluted their stake via QIP as well. QIP shareholders on an adjusted basis has still sitting on a loss. Their buy price was 570 odd rupees. Despite the up move that we've seen from the lows on the stock price, they're still, sitting on losses. How do you assuage their concerns right now?
No,
and are promoters buying more at these levels?
So I think that, the QIP investors need not worry. Q3 numbers were looking depressed because of the duty impact in terms of what we saw, that the prices coming down and the impact it had on the inventory and the profitability. But fundamentally, as I keep saying, that nothing changes. The consumer interest towards the product and category and the brand continues to remain strong. We actually saw a 6% increase in terms of the invoices. We have added 2.5 lakh new consumers into the brand. So I think in the long run, nothing really changes. And it is only, the geopolitical scenario, the market sentiments, the uncertainty that is just creating a little bit of irk in the investor's mind. But in the long run, I think Q2, then Q3 and Q4, especially with the festive season, I am very much positive towards the growth of the company. And if you ask me that at these levels, will I be interested in buying? Maybe yes. Whether I am buying or not is not yet something that I can talk about right now. But I think that we can be confident about the future of the company.
Mr. Suvankar, thank you very much for enlightening us about what's happening in the industry and the company. Thank you for that. Get into a break. On the other side, Manisha Gupta joins in with Sumit Gupta of Vasida Global Commodities. Stay tuned.